Hi folks, this is Paul Cabaj speaking from the Alberta Community Co-op Association. We are expecting about 20 people on this webinar. We'll give a few more minutes for people to join and we'll get going. This session is being recorded and we will be putting all or parts of it up on the web. Just to let you know that if you don't want portions recorded for you, or if you have questions you'd rather not be made public, you can put that to us privately in another format. We'll get going in about 2 minutes. Okay, folks, my name is Paul Cabaj. I'm the Executive Director of the Alberta Community Cooperatives Association. I'm glad that you could join us this morning to look at what we believe is a very important tool for the co-op, nonprofit, and charity sector. We hope this will go smoothly as long as my cats settle down. Joining me, of course, is Ryan from Tapestry Capital. Many of you know we've been working on local investment co-ops across Alberta for about the last dozen years with some very successful examples with that. And about a year ago, we had the opportunity to interact with Tapestry and what they were actually doing around bonds in Ontario and now other provinces. And the language we speak around unleashing local capital and raising equity in communities is very, very similar. There's slightly different legal tools around this, of course, but the process of engaging a community, focusing on an idea, leveraging your social capital to turn into financial capital is all there. So we'll get going with this now. And Ryan, do you want to go ahead?
Sure. Thanks for introducing. Paul, I'm Ryan Collins-Swartz. I'm with Tapestry Community Capital. We're not-for-profit and we support other organizations all across Canada to raise, finance, show capital from your own community. And we'll talk more about that. So today Paul's going to give an introduction and then I'm going to spend about 20 minutes talking about community bonds. We'll be interactive, so you're free to put your questions in the chat as we go along. And then we're leaving a lot of time at the end for just group discussion and questions.
Excellent. Thanks, Ryan. As I was talking, folks, we have done some work with Unleashing Local Capital for many, many years. And part of what we've been doing in the last little while is, as actually the demand has grown and we've been clear in terms of what works and what doesn't, we're also starting to work on the back end supports to reduce the administrative costs for issuing equity, and also both in terms of the legal costs. And we've now started something called Community and Cooperative Counsel and have legal counsel who works directly with us and the clients to make sure that these offers fall within the boundaries of the Securities Commission and you're checking all the right boxes at a much, I think, more lower cost than you would find otherwise, and also in a way that actually builds capacity across the system. We're working with Tapestry as well and other avenues to see what we can do in terms of putting much of the administrative work online and to automate it to ensure that you folks in the front can actually work on the interpersonal aspects of raising money in your community and how to do that in a way that's effective without burning you out. So as I've already mentioned before, the approach that Tapestry takes in terms of raising bonds, it comes out of the history in Ontario that's very similar to ours from the co-op movement. And myself and Seth, my colleague Seth Leon, who's actually on the webinar, attended a couple of sessions, and the language that's used is strikingly parallel, of course, because the process is the same. This is about mobilizing local social capital to turn it into financial capital. So without further ado, I'll pass it over to you, Ryan.
Thank you, Paul. A little bit about Tapestry, in case you haven't heard us before. We were founded in Ontario about 20 years ago by our parent not-for-profit co-op. And we started from the need to raise funds towards renewable energy projects in Ontario. That was the root of it. And when this happened 20 years ago, banks were reluctant to fund to renewable energy, but local community members who really believed in a greener future were willing to commit their dollars in order to get a fair return. And that start in financing renewable energy with some groups like WindShare, SolarShare, and ZooShare started to inspire some other not-for-profit groups who also wanted to take advantage of this amazing thing called a community bond. So since then, we've seen and supported bond issuances for all different types of projects, from affordable housing to renewable energy, recreation spaces to agricultural projects. And we provide a full service solution to make raising community bonds easy and cost effective. So we're with you every step of the way, guiding you along in your project. And then we also provide the back-end administration and management to your investors. So we make it really a breeze to raise community bonds. We want everyone to be able to take care and use this financial tool. Over the years, we've worked on 18 different campaigns, raised just over $65 million in bonds, and we currently manage just over 4,000 investors. And I'll speak more to what that looks like a little bit later. So for now, I'm going to go through an introduction to bonds. I'm going to talk about what they are, where they've worked, where they haven't worked, and also some ways that you can evaluate whether or not it would be a good fit for your organization. After I present each slide, I'm going to take a bit of a pause and see if anyone has any questions. So as we go along, feel free to drop a question in the chat. Paul and ACCA will be monitoring the chat and will let me know if there is a question. So I'd love to answer things as we go, and we'll also have time at the end. So community bonds are a proven social finance tool. They are exactly very similar to perhaps like a Canada Savings Bond or any type of security that people would be familiar with, where it has a fixed term, fixed set interest rate, and set maturity date. So for example, you're investing in a 5-year bond, $1,000 minimum, and getting a 3% interest payment every year. In this case, there is an exemption nationally across Canada for not-for-profit and charitable organizations. So that's a national exemption to use community bonds. You don't have to go through your local securities commission and go through the same prospectus process. And for cooperatives, it's done on a province by province basis. So there is an approval process for cooperatives. So the path is slightly different. It is an interest-bearing loan. It's an investment. It's not a donation. So you have to have some way of generating revenue and capital to be able to pay people back their interest payments every year, and also to pay them back their capital at the end of the term. The investors are your community members, both people and also corporations, institutions, and foundations. And in some cases, in about 50% of our projects, we've seen bonds being held in savings accounts like RRSPs, TFSAs. This makes it a lot more accessible to all different types of investors. We also see that the campaigns where it does have this type of eligibility, investors are also able to invest quite a bit more because they're able to invest from their registered savings accounts and not just from the spare capital that they have in their pockets. So essentially, if you have a capital project, a need to raise funds, you would put together an offering. We would support you to issue the bond. Your community members, people from your local community, would purchase the bond to invest in your project. You finance your project. You pay your investors back over time. To get into some more details about community bonds and why we've seen them being used so well, the first reason is it's all on your terms. So community bonds are extremely flexible, and as the issuer of the bond, your not-for-profit, charity, or co-op gets to set all of the terms. So you get to decide how much you're raising. You get to decide what the interest rate is, how many different investment options you have, if it's a 20-year bond or a 5-year bond, if you're giving people an interest payment annually each year, or depending on your project, you're paying people all the interest at the end. Also, with some charities, we're now working on something called a charitable bond. So you're giving investors the option to donate back their annual interest payment and receive a tax receipt. So entirely different from, let's say, going to the bank or working with a grant funder, where you're essentially fitting within their constraints and their terms. For community bonds, you're in full control, and you get to set it for what works best for your situation and your project. A big advantage of community bonds, and this is both from your perspective as a bond issuer and also for a potential investor, is they are secure. So at Tapestry, we only advise on projects that are asset-backed, similar to if you're going to get lending from a bank, they're looking at giving you a mortgage or a loan that's backed by an asset. It's the same for community bonds. We typically see bonds that are successful when they go towards the purchase of an asset, like purchasing land, developing real estate, buying a major piece of equipment, and not annual operations. Community bonds are also very inclusive to everyone in your community. So they're an investment option, but they're a way to get a really wide range of your support network involved. So for example, a typical campaign that we have would have one bond which is at a very low minimum, let's say $500 or $1,000, which is the minimum that someone has to invest. But they'll also have another type of bond which is structured for a high net worth individual, a corporation, a foundation. So you really see sometimes hundreds or thousands of investors in a project, and it's a way that everyone can really get involved in your campaign and in your project. When we look at different groups who've raised community bonds, they see them really effective in engaging their community as investors, so that you're getting people to literally buy into your mission, to your project, and your success. This works really well also for membership-based organizations. So let's say you're developing a new co-working space and you're raising capital to purchase it and renovate it. You can imagine that the people who invest are also more likely to become members, to host their events at your space. People really feel a strong sense of attachment to these projects in their own communities that they invest in. The last piece that I'll highlight about bonds is they're really demanded. Investors are desperately looking for impact investments, places they can put their money in their own community into tangible projects that give a fair return. So each campaign that we've supported has been oversubscribed. So when you put out your campaign, you set a maximum, which is the total you're looking to raise. And each campaign, there has been too much demand from investors, then organizations have had the capital to take on. So for the right project and the right organization that I'll speak to in a little bit, they're a really powerful way of raising the money you need on your own terms. I'm going to pause here and see if there are any questions before I move ahead.
The only questions at this point, Ryan, are just around sharing materials afterwards, which I've responded to.
Mm-hmm.
Perhaps folks, when we do actually get towards the end here, if you can think about which of these projects might work for you, any projects you want to bring forward to discuss, and Ryan can link that back to the experience they've had with other nonprofits, charities, and co-ops in issuing these shares. So proceed ahead.
Sure. So if there are any questions as we go along, feel free to put them in the chat. We'd love to address them as we go. So here's a look at the different types of projects we've supported and where bonds have worked. After a start in renewable energy, they've inspired all different types of organizations to raise community bonds. The smallest campaign that we've supported is 200,000. The largest is just over 10 million in a single campaign. And the average campaign that we support is about $2 million. We've worked on community bonds for community theaters and sports clubs, community hubs, co-working spaces, as I mentioned, agriculture projects, co-op grocery stores, different farming initiatives, lots in renewable energy, and so much in affordable housing, supportive housing, and all different types of solutions. So this is just where they've worked before, and I continue to be amazed by all the different outreach I get every week from all different types of organizations where bonds are now going to be used.
Ryan, we do have a couple of questions now.
Great.
This is from Denise Weirs, who's from the Alberta Securities Commission itself. What is the basis for securities law compliance? I'm not clear what prospectus exemption would be used.
Well, specifically, and we can get into it more at the end of the session, there is a federal exemption for not-for-profits to raise capital through community bonds. So that's a national exemption. However, but for cooperatives, they still have to go through the Alberta Securities Commission. And in Ontario, co-ops have to go through FSRA. So they do have to have an offering memorandum, which is receipted and accepted by the local Securities Commission.
Excellent. Okay, and we'll get to that a bit later again, Denise, both at the end of the presentation and later directly. And other questions we have, can the bonds be profit sharing rather than interest?
No, so the bonds, at least community bond, the bond is a fixed income investment. So you have to set all of the terms of the bond upon issuing it. So it's a fixed interest rate. Okay,
yes, that's the difference. Otherwise, it would be an equity offering, which obviously has less security to some extent. The next question is, can Tapestry consider a $30 million plus project for raising bonds?
We've worked on projects as large as 30 million. I would also say that typically bonds are anywhere between 10 and 40% of the project's financing. So it's very, very, very rare that we would work on a project where community bonds are raising all of the money needed for a project. To give an example, we're working on a $30 million project now, where community bonds are raising about 14 million. And then the organization also has some government grants. They have a mortgage, and they also have some capital reserves. So bonds are just really one piece of the pie when it comes to financing your project.
Excellent, thanks for that. Ryan, those last two questions were from Imad. Now from Youssef, can you explain the difference between community bonds and social impact bonds?
Sure. We have a great article on our website at tapestrycapital.ca, which explains the difference in a lot of detail. But I would say like the main difference is a community bond is issued between you and an investor in your community to finance a capital project. A social impact bond is a three-way agreement between your organization, government, and an institutional investor, so not typically an investor who's investing a low amount of money. And that's all based around that your organization is going to deliver cost savings to government. So it's a pay-per-performance agreement where if over 5 years, let's say your organization works to house street-involved adults, if you have a pay-per-performance agreement with your local or provincial social services agency, if you're showing that your organization is actually getting more street-involved adults housed, reducing the demand for and costs for their services, you'll be paid for that performance. So they are very, very different. And it's a bit of a shame that there's so much confusion between a community bond and a social impact bond.
Pretty common question. And just a tie to that by Youssef, from your perspective, Ryan, when is it best to use one type of bond over the other? Maybe that will clarify the difference even more.
Sure. Social impact bonds are great for, as I just mentioned, so running actual programs. So if there's a program that you're running that's going to address the social issue and you're looking to raise capital for a program related expense, and you also have good relationships with government, so it could be federal, municipal, provincial, then a social impact bond is the right case. Community bonds work really well when you're looking to raise funds towards a capital project. So you're looking to, acquire an asset, purchase land, develop a building, a facility. That's when it works really well for a community bond. I'll also say that for a social impact bond, it takes many, many years of negotiation and structuring and getting government agreements. Whereas for a community bond, if you have to raise capital in a shorter period of time, you really control your own destiny and can raise funds when you need them.
Great answer. Thanks, Youssef, for the question, and keep the questions coming, folk. Sherry Poole, who I now understand is also from a municipal background, has this question. Are the bonds treated like a debenture?
Yes. So community bonds are a form of debt. You're borrowing money from your community, and in our projects where organizations are both raising bonds and taking a bank mortgage, the bank will recognize them as another source, as another debt obligation.
Excellent. And a comment from Martin, social impact bonds are not really bonds and community bonds are really bonds. I would assume you'd agree with that statement.
Well said. I couldn't have said it better.
Yeah, Martin's always good for a one-liner for sure. Okay, keep on going.
Okay, perfect. Wanted to bring up, this is a sample bond structure from one of our latest campaigns, because there's often this myth in community bonds, and I would call it the myth of one bond, where people have this idea that you're actually just giving one investment option for everyone to put their money into. Actually, the projects that we support, there's on average 3 different bond options, bond series. And this is for 2 reasons. The first is that when you look at these 3 choices, you can imagine that everyone in your community is typically going to see one option where they can get involved, whether it's a lower minimum investment amount or a shorter or longer term. Second reason is it also matches the cash needs of your project and your organization. So when I say that, first, it makes a difference when you're actually raising capital. So this bond was for an organization that's developing an affordable housing complex. And the idea is they're raising $5 million, but they actually don't need that $5 million all at once in a 3-month period. They need it over the course of about 1.5 years from when they purchase the land. And then in 6 months, they're going to start construction, and then they're going to have construction phase 2, then open their doors. So for them, they're actually launching their campaign first with the Series A bond to raise money for the purchase of land. Series B is going towards starting construction, and Series C is going towards final fit out and opening the facility. Not every group does this, but that's an example. And then this also makes a difference when you're actually going to repay the maturing bonds. So as you can see here, they have a bond that's due in 3 years, another that's due in 5 years, and the last one that's due in 7 years. So this allows an organization to spread out their repayment to investors, and you're not having 1 year in which all of these bonds are coming to be mature. So that's the reason for the different bond structure, and every organization we work with to come up with the right structure for you and your community.
That's great, Ryan. Just for people to think about as we're going through this, and Ryan mentioned here that this kind of structure was used for an affordable housing project. If you can and you're open to it, maybe put a very short description in the chat about the project you're looking at, particularly if there's housing, and you can explore that so we can actually go in a bit deeper in those examples later on. One thing, Ryan, I believe you do talk about it later, but one thing that strikes me as well, given that we do have folks from a broad range of groups here, and many of them are tied to foundations and others, can you just explain a bit about how actually foundations become involved in these, both in terms of, obviously many of them will support, let's say, an affordable housing project, but they will also buy the bonds that might be issued to support that, right?
Sure. I think just to think about foundations, there's the granting arm and then there's the investing arm. So quite often on a project that we work on, actually like the housing project is actually a great example, because they received a grant from their local community foundation that was going towards the initial pre-development for this project. So helping it get off the ground, helping them work with architects, just get all the plans together. And right now they're in discussions with their local community foundation, the same one with their investment arm, about getting an investment in their community bond. So it allows the foundation to have even more impact because the grant is now working with an investment to make the project come to life.
Thanks, Ryan. Again, folks, if you're open to just describing what project you're looking at doing, we'd be happy to see that in the chat.
Going to move into some examples of how community bonds have been used, and there's some great lessons here. The first example is the main showcase project we worked on outside of renewable energy, and it was with the nonprofit co-working space, which is called the Center for Social Innovation. They have a pretty amazing story because at the time they were operating in a leased space. They had a wait list of many people who wanted to move their offices into their co-working space. And anytime they actually wanted to do some renovations or host a certain kind of event, they were at the mercy of their landlord. And about 7 years into operating their organization in 2009, they thought, well, also if we own our own space, we're going to be a lot more financially sustainable. We're going to be basically able to control our own destiny and not be subject to rising rents or being evicted. At the time when they wanted to do so, they just had about $50,000 in cash reserves as an organization. But as Paul was hinting at, they had a lot of social capital. They had many different funders. They had about 250 different members who really love their community, love working there. They worked with their local credit union to get a mortgage for about 60% of this $5 million building. But they had this gap of the 40% plus renovations. And we worked with them to structure this community bond. All these bonds were RRSP and TFSA eligible. They're able to raise that campaign and purchase their first building. Huge victory. It was like a huge win at the time. And that wasn't it. The bond was a great tool to further scale up. So just 5 years later in 2014, they had even more member demand, even more publicity because of this bond raise. And they looked at purchasing and developing their second nonprofit co-working space location. This time, 227 investors got involved, raised just over $4 million in bonds, and expanded to that second location. What's really amazing about their story is that we continue to work with them to get reinvestment from their bondholders. So what I mean by that is from both their bonds from 2009 and 2014, when they became due. So imagine it's a 7-year bond, and the investor is going to get their money back. So many of their investors, just under 80% of them, said, no, I would love to keep my money in your organization and continue my investment for another 5 years, because I see it having amazing impact. I'm earning actually a pretty great consistent interest rate. And each year we continue to work with them on a reinvestment campaign for one of their bond series, which is coming due. And in June of this year, we closed their last campaign, which was just under $2 million raised. And that money, which was first raised for purchasing buildings for those assets, is now being put into programs and operations and being used as a pretty incredible way to finance the organization. One thing that came out this spring when we were working with them on their latest offering package to go out to investors were some of these things of how they've grown over the years. And I was really struck by them, so I wanted to share. So since in 2009, when they first launched their campaign, they had annual revenues of $400,000. 10 years later, that's grown to over $9 million. They expanded from 1 leased location to 4 locations, 2 of them which are owned. And they've supported just over 5,000 tenants and social ventures to launch and grow in Ontario. So that's pretty amazing. And they've seen community bonds be this catalyst for their own growth and really core to how they operate as an organization. As a community-based co-working space, they're actually raising financing in a way that aligns with their mission and their values. And since they've grown to own these 2 assets, it's been such a change where to get their first mortgage to buy their first building was such an uphill battle. Now they have all different types of banks and credit unions lined up to loan them at really low rates, because now they have this track record and they own these assets. But they still maintain, even though they don't even fully need the funds from community bonds, to still keep this program alive, because it's such an amazing tool that keeps their community engaged. So they keep going. Any questions about CSI before I get into another project?
No questions about CSI. There is a comment here in New Brunswick. This is from USEF. We have something called CEDC. In Nova Scotian PI, they call it CEDIFs. What are the major differences between a community bond and a CEDC CEDIF? And when is it best used, one over the other?
They are different in both of those models. Those are equity, so they would work for shares, and they offer tax credit to investors. They haven't worked best for the purchase of capital assets, and we're starting to work on some projects in these regions with community bonds, and we're looking at how different incentives could also be given to community bond investors, because the biggest reason for those programs being in existence is it gives an incentive for an investor to put their money in. But when investing, you're getting the tax credit, but there's not the same security and guaranteed return as a community bond. Okay. I'm going to shift to an example in a more mid-sized community, Peterborough. I believe it has about 70 to 80, maybe 60 to 70,000 people who live in Peterborough in Ontario. They were a startup charity that formed with a group called the Peterborough Anti-Poverty Coalition. And we're going to see how a community bond was a catalyst to bring in other financing as well. So this group came together to develop more affordable housing and solutions in Peterborough. And this incredible property, which was a former convent and teaching hospital for the Sisters of St. Joseph, came on the market. It was going to be developed into a residential condominium, but a bunch of people in the community came together and said, this is such an amazing property. We want to use it as a space for good. They ended up rallying and raising just over $2 million in bonds from under 70 members in the community, and they acquired this huge property. They worked with the building owner who decided not to develop the condominiums and work with them because they believed in this mission. They've since developed this into a center with affordable housing, supportive housing, a commercial food enterprise. They have all these different spaces that they rent, for like youth dance classes and orchestras, and different nonprofits have their offices there as well. An amazing thing about the Mount is when they raised that $2 million in bonds, that took an organization that was just, like a startup with no financial track record, that unlocked a mortgage from their local credit union, a $1 million gift from their local municipality, as well as some other grant funding. So you can imagine for a community-based project, when you're raising with community bonds, it's really big proof of the demand in the community and the support that's created. I'm going to shift to a local example of a campaign that's coming in early next year that we've been working on for quite some time, is with Platform Calgary. They are in the process of developing the Platform Innovation Center in East Village, which is going to be a space of supporting the next economy in Alberta, supporting small business owners and supporting the entrepreneurial and innovation economy, helping founders launch their businesses, raise capital, connect with other organizations, and create more jobs in Alberta. And this is an example. Like, keep your eyes and ears open for their campaign. And we're going to see community bonds along with mortgage, fundraising, capital reserves, and some other financing sources all come together for this project. I'm going to get into an example of the typical project timeline and some of the different stages. Are there any questions before I move on about some of the different projects I spoke about?
Folks, you can put questions in chat, or you can actually unmute if you want to ask a question directly. Okay, Ryan, keep going.
There's often questions about how long a community bond project takes. And the answer is our typical project is just under 12 months. And you can think of it as 6 months planning your project, getting your campaign ready, and then 6 months when your raise is open and you're actually accepting funds from investors. We have a proven process, and we guide organizations every step of the way. For the first 3 months, it's all about assessment and feasibility and learning if bonds are the right tool, and then figuring out the major details about your campaign, like who will your investors be, what bond terms would be attractive, what's the financial picture for your organization, how much in bonds can you raise, how much can you repay, and also looking at the structure of your team to figure out how you can best organize to lead a successful campaign. The structuring is once you've set on your campaign, how much you're raising, all these details, we're putting everything together, the legal offering, your business plan, getting everything ready on the marketing side, and training your team to lead your campaign. And the raise is really the exciting part when you're out there hosting events, speaking with investors. We're supporting you in the background as a project manager and also doing the administration, so helping you take in and facilitate the investment, processing and producing your bonds, and getting everyone organized and ready to go. And management happens for the life of the bond. So that's where I mentioned those 4,200 investors. So you can imagine that you've come to the finish line, you've built, let's say, your local not-for-profit grocery store, and you now have 140 different investors, each have a different investment size, and now every year you need to do the financial reporting. All those investors need to be sent their tax forms or T5s every year, and their interest payments. We take care of all the back-end administration for organizations. And we have an in-house software system that we developed about 6 years ago to take this on, and also a dedicated team that is basically the back end or the back office for your community bond needs. Our goal.
Okay, Ryan, we've got a couple of questions here from Lucette. What are your fees?
Our fees range from the different stages of a community bond project. So for investor management, it's a set fee based on, which is a per investor fee. Right now, it's 70 cents a month per investor. Doesn't change based on how much that investor has raised. It's just the amount of work for an investor who's invested 1,000 or 100,000 is the same. For the raise, we charge based on an hourly rate for our project management and support, based on the actual hours that you need. And our fee for this year is $60 an hour for not-for-profit organizations. And for the assessment and structuring, it varies. It's fee for service based on the size and complexity of your project, and also what resources your team has. So for example, our scope of work would be more if you had an extremely large project, complex campaign, but also had a smaller team where you needed Tapestry support to develop your financial model, to play a big role in your business plan. However, for organizations who have a lot of staff and a lot of capacity, our fee is then lower because it's less time and effort on our behalf.
Okay, there's a question here from Youssef. He would like to get your contact info, which of course you'll have at the end here. What are the best resources that you know in terms of books, websites, podcasts to get more familiar with community bonds?
The number one thing I would recommend is we do an introductory workshop with your organization about community bonds. And along with that workshop, we give you our community bond guidebook and lots of other resources, as well as walking your team through everything about community bonds. And pull out some information here, everything about community bonds, and actually workshopping your project and coming up with an assessment of your organization's fit for community bonds. So that would be a great place to start. I would also recommend going to our website, which is tapestrycapital.ca. And there we've been featured on many different podcasts and have different guidebooks and things like that to advance your learning. But we can also connect over email, and I'll just send some things your way too. Before we pause for questions, to go over, you've taken in a lot of information. Here are 4 things that we generally look at to see if community bonds are a good fit. And the first thing is actually all about your project. So the number one thing that we see makes or breaks a successful campaign is having a project that is meaningful to your community. A project that's going to mobilize people and inspire them to invest. If that project isn't motivating, then that's like the number one factor where we see campaigns that aren't successful. The second thing is about your investment minimum. Our minimum for a campaign that we would support is about $500,000. We see more efficient ways of raising funds that are lower than that because there are other sources. So the average campaign that we support is about 2 million. We've done as large as 10 or 15 million as well, but that's kind of the sweet spot for bonds. The third point is really important. It's for investors. When they invest, they're going to want to have the confidence that they're going to be repaid and they're going to get their money back, both their interest payment and their principal investment. So there needs to be some sustainable revenue model to repay investors. For some organizations, that looks like the bonds are allowing them to launch a new service, like for Center for Social Innovation, they were purchasing a building that would allow them to sell 500 more co-working space memberships, and those funds would be going towards repaying the bonds. For other organizations, we've seen simply the bond interest is replacing their monthly rent payments. So we worked with one community arts organization this year, and when they looked at the numbers to raise community bonds and take on a mortgage to purchase their space, with a little bit of fundraising help, would actually be equal to the amount of rent they're paying per year. So that was kind of a no-brainer for them to start to look at owning their own space. The last piece is about your connections to your own community. It really comes down to relationships. The bond campaign is a great way to develop new relationships in your community while also building on existing ones. So that's something that we look at in our workshop, in our early assessment, where for some organizations, it's really going to be too much of an uphill battle to go out and raise bonds, but for others, it can be really well positioned to take advantage of them. Before we get into questions, I'll highlight again the Community Bond Workshop. After this webinar, we're happy to spend more time speaking to your organization, learning about your project and your questions about bonds. Every project we take through our workshop, which is the first step in your bond campaign. And we give an upfront assessment on whether or not we think bonds are a good fit or there's a better financing tool available for you. So I thank everyone for attending today. I'd love to take your questions, and thank you to Paul and the folks at ACCA for allowing me to share about bonds today.
Excellent, Ryan. So folks, we are opening up for question and answer right now. You can put it in the chat, or if you want to unmute and put on your video, happy to see your face and hear your voice. We do have a question here from Youssef. What are the lower end avenues to raise money that you would recommend if community bonds are not the correct tool? I'm thinking he's talking maybe the under $500,000 offer.
It really depends on the projects. We've seen groups like just do like a basic crowdfunding or a GoFundMe if they're looking at a much smaller project and there is that community support. Or for some groups, if it's just like a minor renovation, getting basic construction financing for a project is something that's been used. For cooperatives, if it's a smaller project, you can just look at basic member loans. So you're not actually having to go through creating the offering memorandum and all those different steps to going outside small groups of members.
Excellent. Any other questions from folks? Again, either in the chat or you can unmute and ask a question.
I'll jump in. Hi, it's Seth. I'm also with the ACCA. I'm the manager of co-op services, and great to see some familiar faces on the call. And Ryan, that was a great presentation. One of the things, I guess, as we're looking at projects here in Alberta, I mean, there's lots of rural communities with amazing heritage buildings. These can be excellent for mixed use in terms of commercial and residential, as well as an opportunity to invest in energy retrofits. And if we look at the long-term costs in utility and maintenance, that might be an opportunity to inject some capital, revitalize these buildings, and bring some vibrancy back to the main street in communities that are amazing. I'm a big movie fan, so there's some great movie theaters that are small and could potentially be great candidates for this. So I don't know if you want to speak to this, or if a community was to look at a project like that, how would they get started?
Yeah, it's a great question. Thanks, Seth. I think that's, out of all the different types of projects, one of my favorite, which is like, we need to save this building, or this is underutilized space that could have such a higher value. And then the community plays a leading role to shaping what it's going to be. So I would say like the first step before raising funds is looking at the structure of ownership and how it's going to be run and operated, whether it's going to be a co-op or a new not-for-profit is going to be formed. And then after that, it's great to actually look at how it's going to be financed, whether community bonds are a good fit. Because I would caution that sometimes the desire, I'll get a call like, oh, this concert venue is closing. We want to raise a community bond to save the space. And I think the issue is without a clear organizational structure, because they're not actually a formed organization, they can't raise the funds, and then also from an investor's perspective, without understanding what the operating model is going to be and who's going to be responsible, it's difficult for an investor to put their money in.
Thanks, Ryan and Seth. Good questions. Does anybody else have a question which they'd like to unmute or put into the chat? So maybe Ryan, just as from my perspective, having worked with some of the other co-op investment processes in the past, one of the key issues has always been the leadership group. Who they are, how they approach this. Can you describe what you would characterize as a high-performing leadership group that could, within an organization, that could lead a bond forward?
Mm-hmm. Yeah, like people really do matter, and it really doesn't matter if you're a large organization with a lot of paid staff and a significant budget, or if you're a volunteer-led organization with like a volunteer board. I've seen, really good and really challenging teams in both. And I would say like the really successful ones have almost like they have like two leaders. So one I would say is an internal leader who's kind of behind the scenes as a project manager, making sure that everything is done and organized and managing everything that needs to be done and the other people on the team, while also having more of an external leader who's, I would say, the public face for the campaign, who's going out, who's making presentations, who's speaking with the media and engaging the community. And if you have only one of these two, it's a challenge. And if you're too organized, but no one knows about your campaign, it's not going to be successful. But if you're too rah, but actually aren't getting things done behind the scenes, your campaign won't be successful. So I see that balance of having both like the public face, but also the internal project manager is really important to a team.
Excellent. Thanks, Ryan. Final call for any questions or comments from those attending the webinar today. Okay. I'd like to thank folks for joining us here. I'll let Ryan make a last few comments and then we'll bring this to a close.
Sure. Yeah, thank you everyone for attending. Both Paul, Seth, and myself are available for further questions or consultation. If you want to get in touch with us, we'll put our information in the chat and also send out a follow-up email with the presentation, as well as some possible learning resources too. So thank you, everyone, and look forward to speaking with you soon.
Oh, you know what, Ryan, we just did get one more question here from Yusuf. What about the success of brand new projects compared to established orgs that have projects?
Yeah. Your first campaign will always be the hardest. And subsequent campaigns, like the great example is the Center for Social Innovation, where their last campaign was they raised $2 million in just over 40 days because they're a well-known entity, they're trusted, people have confidence. Always with your first campaign, people are going to be looking at it with a little bit of uncertainty. Gosh, like who are these people? They haven't done this before. And like maybe I'll invest, but I want to see if other people invest first. So the first campaign, really, you have one chance to make a first impression, and it's really important that everything is done properly on that first one, and then it makes all the other campaigns a lot easier.
Excellent. Thanks very much for that. Okay, again, folks, you're welcome to reach out to us. We'll send this PowerPoint to you. We will be posting this webinar, sending it to share with your colleagues. We'll put it on our website. If there's other questions, again, you're welcome to talk to myself, Seth, or Ryan, and we can go to a next stage with your group. I'd like to, again, appreciate the work that Tapestry has done. Ryan just put his email into the chat box. You can reach for him directly. Again, this is about unleashing local capital, and in many ways before that, unleashing your social capital. We've got a range of projects going on right now on equity raises in communities across Alberta. As you've heard, Tapestry is already active in Alberta with one particular campaign. We hope there's more. And we'll be working with them closely, both here in Alberta and across Western Canada, to kind of roll their excellent work out and their range of supports to make you folks successful in raising money in your community. So thanks very much. Have an excellent day, and we'll be hearing from you soon.
Thanks, everyone.